Have you ever been frustrated by a failed bank transfer? Or wondered if there's a simpler way to exchange value without relying on intermediaries? Today, we're diving into the fascinating world of blockchain, the revolutionary technology behind cryptocurrencies that's transforming how we think about digital transactions. The problem with traditional transactions, let's start with a scenario we can all relate to. Imagine 4 friends, Jack, Ted, Sam, and Phil, getting together for dinner. After enjoying their meal, Jack offers to cover the bill, with everyone agreeing to pay him back their share later. The next day, Phil promptly sends his portion to Jack through his banking app. The transaction goes through seamlessly. But when Ted and Sam try to do the same, their transactions fail. The reason? Technical issues at the bank. This situation highlights the common drawbacks of traditional banking systems. Transactions can fail due to various reasons: system maintenance at the bank, account security measures, daily transfer limits, or even unexpected processing fees. These inefficiencies have long been accepted as inevitable hurdles in our financial system. But what if there was a better alternative? This is where blockchain and cryptocurrencies enter the picture. Introducing cryptocurrency and blockchain. Cryptocurrencies represent a revolutionary form of digital money that operates on a technology called blockchain. Unlike traditional currencies controlled by central banks, cryptocurrencies offer several unique advantages. They can't be counterfeited. They don't require oversight from a central authority like a bank or government. They're secured by sophisticated encryption algorithms. While there are thousands of cryptocurrencies available today, including Litecoin, Ethereum, and Zcash, Bitcoin remains the most well-known and widely adopted. Blockchain in action. The dinner bill reimagined. Let's revisit our dinner scenario, but this time let's have Phil, Ted, and Sam pay Jack using Bitcoin instead of traditional bank transfers. Assume that Phil, Ted, and Sam each have 3 Bitcoins saved, while Jack has 5 Bitcoins. When Phil sends 2 Bitcoins to Jack, something remarkable happens. The transaction creates a digital record, known as a block, that permanently documents this exchange. This block doesn't just record the transaction itself, it also updates the Bitcoin balances. Jack now has 7 Bitcoins, while Phil has 1 remaining. When Sam and Ted follow suit and send their 2 Bitcoins each to Jack, new blocks are created for these transactions. Each new block connects to the previous one, forming a chain that maintains an up-to-date record of everyone's Bitcoin balance. This chain of linked blocks forms what's called a ledger, essentially a record book of all transactions. But here's what makes blockchain truly special. This ledger isn't stored in just one place. It's distributed to all participants in the network, creating a public, distributed ledger that everyone can see and verify. The power of the distributed ledger. The distributed nature of blockchain creates inherent security. Let's say Phil, who now has only 1 Bitcoin left, tries to send 2 more Bitcoins to Jack. The system would immediately reject this transaction because everyone in the network has a copy of the ledger showing Phil only has 1 Bitcoin remaining. This same principle makes blockchain highly resistant to hacking and fraud. A hacker would need to simultaneously alter the data on every copy of the ledger throughout the entire network, a practically impossible task. Furthermore, all data within the blocks is protected by advanced encryption algorithms, adding another layer of security. The technical mechanics of blockchain. At its core, blockchain is a collection of records, blocks, linked together through cryptography, creating a system that's extremely difficult to manipulate or alter. But how do these transactions actually work at a technical level? Each user in a blockchain network possesses 2 essential keys. 1. A public key, similar to an email address that everyone can see. 2. A private key, a confidential code known only to the owner, functioning like a password. Let's break down the Bitcoin transaction between Phil and Jack. First, Phil initiates the transaction by providing the amount of Bitcoin being sent, his wallet address, public key, Jack's wallet address, public key. This information passes through a hashing algorithm which encrypts the transaction details. Phil then uses his private key to digitally sign the transaction, verifying that he authorized it. The encrypted transaction is broadcast across the network, but it can only be decrypted using Jack's private key, ensuring only Jack can receive the funds. Different cryptocurrencies employ different hashing algorithms. Bitcoin uses SHA-256, while Ethereum uses Ethash. These algorithms are crucial for the security and functionality of blockchain networks, miners, and the validation process. But who ensures these transactions are legitimate? Enter the miners' specialized participants in the blockchain network who validate transactions and add new blocks to the chain. When Phil sends Bitcoin to Jack, this transaction doesn't instantly become part of the blockchain. Instead, it joins a pool of pending transactions waiting for verification. Miners collect these pending transactions and work to validate them by solving complex mathematical problems, a process called proof of work. The first miner to solve the problem adds the new block to the blockchain and receives a reward currently 12.5 bitcoins for the Bitcoin network. This process, known as mining, not only secures the network but also introduces new currency into circulation. Once the transaction is verified and added to the blockchain, Phil and Jack's wallet balances update accordingly, as do the records of everyone else in the network. Real-world applications beyond cryptocurrency. While blockchain is best known for powering cryptocurrencies, its applications extend far beyond digital money. Let's look at how Walmart has leveraged blockchain technology to transform its supply chain management. Walmart was struggling with quality control issues. Customers were returning products and demanding refunds due to poor quality. The company couldn't pinpoint where in their complex supply chain, from farm to storage to transportation to processing to retail, these quality problems were occurring. After implementing blockchain technology, Walmart created an immutable record of product quality at each step in the supply chain. Now, when a customer reports a damaged product, Walmart can trace exactly where in the journey the product was compromised. This allows them to identify problem areas in their supply chain and implement targeted solutions, significantly improving overall product quality and customer satisfaction. This is just one example of how blockchain's transparent, tamper-resistant record-keeping can revolutionize industries beyond finance. Other applications include securing medical records while maintaining patient privacy, creating transparent voting systems, protecting intellectual property rights, authenticating luxury goods to combat counterfeiting, streamlining real estate transactions, the future of blockchain. As blockchain technology continues to evolve, we're likely to see increasingly innovative applications across virtually every industry. The core principles that make blockchain revolutionary, decentralization, transparency, and security, address fundamental challenges in our increasingly digital world. While cryptocurrencies like Bitcoin may experience market volatility, the underlying blockchain technology has demonstrated lasting value. Its ability to create trust in digital environments without requiring centralized authorities represents a paradigm shift in how we think about transactions, record-keeping, and digital interactions. The next time you experience a frustrating bank transaction delay or wonder about the security of your digital information, remember that blockchain technology is already building a more efficient, secure alternative. Whether you're splitting a dinner bill with friends or managing a global supply chain, blockchain is reshaping what's possible in our connected world. What other applications of blockchain technology can you imagine? The possibilities are limited only by our creativity in applying this powerful tool to solve real-world problems.